Headline: The Rise of Online Currency and the Decline of Hard Currency in a Digital Age. I'm Atnafu Solomon, and welcome to this special report on the seismic shifts occurring in our financial landscape. As we navigate an increasingly digital world, hard currency, cash and coins, faces unprecedented challenges, while online currencies such as Bitcoin, Ethereum, and central bank digital currencies, CBDC, are on the rise. However, recent trends indicate that hard currency is facing unprecedented challenges. Today, we explore the driving forces behind this transformation and consider the implications for our future financial environment. In an age where convenience meets technology, the way we handle our finances is undergoing a monumental shift. Cash, coins, and even traditional credit cards may soon fade into obsolescence as online currencies such as Bitcoin and Ethereum, along with central bank digital currencies or CBDCs, become increasingly prevalent. But what is driving this transformation? A recent report from the International Monetary Fund reveals that over 75% of global transactions are now conducted digitally, a statistic demonstrating a profound change in consumer behavior and economic structures worldwide. Countries are actively embracing this shift. For example, China leads the way with its digital yuan, already implemented in several cities, while Sweden explores a cashless future with its e-krona pilot program. African countries like Nigeria are also testing their central bank digital currency, the e-naira, aimed at improving financial inclusion for unbanked populations. Countries around the globe are not just observing this trend, they are actively participating in it. China, for instance, has been at the forefront with its digital yuan, already in use across several cities. Sweden, too, is making strides toward a cashless economy with its e-krona pilot program, aiming to modernize its payment landscape. Meanwhile, nations like Nigeria are also experimenting with their central bank digital currency, the e-naira, to improve financial inclusion in a largely unbanked population. This rise in digital currency adoption is being fueled by several key factors. First, the demand for convenience is driving consumers towards instant mobile payment solutions. Second, the ongoing pandemic has accelerated the shift to contactless payment methods as people seek safer, hygienic alternatives to cash transactions. Lastly, digital currencies offer an opportunity for economies to reduce the high costs associated with printing and managing physical currency. Financial analyst, the digital revolution in finance is here to stay. With advancements in blockchain technology and increased regulatory clarity, we are likely to see even broader acceptance and integration of cryptocurrencies and CBDCs into everyday transactions. Scene transition: visual representation of a world map highlighting countries that have adopted or are exploring digital currencies. Governments worldwide are taking note of the advantages that digital currencies can offer, from enhanced transaction efficiency to potential economic growth. However, challenges remain, including regulatory hurdles, concerns over cybersecurity, and the impact on monetary policy. As we stand on the brink of a digital finance revolution, the question remains: are we ready for a cashless future? Only time will tell, but the shift towards online currency seems inevitable. Stay tuned as we continue to explore this evolving landscape and its implications for our economy and daily lives. The decline of hard currency in a digital age. Several factors contribute to the diminishing role of cash in society. First and foremost, security risks have become a pressing concern. As crime rates fluctuate, cash remains a prime target for theft. Furthermore, the rise of sophisticated technologies has made counterfeiting easier, leading many to question the integrity of physical currency. Consumers are becoming increasingly cautious about carrying cash. Security risks. Cash vulnerable to theft and counterfeiting. Convenience is another significant driver behind this shift. With the advent of digital payments, consumers are finding that transactions can be completed rapidly and securely without the need for cash. QR codes and mobile wallets enable instant payments, making shopping easier than ever. Recent statistics show that mobile payment platforms have seen a surge in adoption, particularly among younger demographics that prioritize speed and ease. Convenience. digital payments are faster and more efficient. In tandem with these technological advances, government regulations are encouraging this transition away from cash. Many nations are instituting policies that favor traceable and taxable transactions, incentivizing businesses to adopt digital payment systems. This push for transparency aims to curb tax evasion and illicit financial activities, leading to a more regulated economy. Government regulations towards traceable transactions. The COVID-19 pandemic has further accelerated this trend. Health concerns motivated many to forego cash transactions in favor of touchless payments to minimize physical contact. A report from the World Health Organization even noted that cash could harbor viruses, prompting businesses worldwide to adapt. As a result, consumers and retailers alike embrace digital solutions as a safer alternative. The pandemic effect, accelerating the move away from cash. To gain deeper insights into this phenomenon, we spoke with financial expert Dr. Mark Richardson, who highlights the broader implications of moving away from hard currency. Physical cash is becoming increasingly obsolete as central banks push for digital currencies that are easier to monitor and regulate. This will not only change the way we conduct transactions, but also how we save and manage our wealth. With digital currencies on the horizon, it's crucial for individuals and businesses to adapt to the changing landscape. With countries exploring the adoption of central bank digital currencies, CBDCs, the framework of financial systems across the globe seems poised for a significant transformation. While the decline of hard currency presents economic opportunities, it also raises questions about privacy, security, and accessibility for all citizens. As we navigate this transition, it remains essential for both consumers and governments to strike a balance between embracing the benefits of technology and protecting the rights of individuals in the financial ecosystem. We'll keep you updated as this story develops. For now, I'm Jane Doe, and thank you for joining us. The rise of central bank digital currencies, CBDCs. As traditional financial systems face considerable challenges, we're witnessing a new development in the world of currency. Central bank digital currencies, or CBDCs. These digital forms of national currency, controlled and issued by central banks, are set to reshape the way we think about money. What are CBDCs? CBDCs are essentially digital representations of fiat currencies, designed to make transactions more efficient and accessible. Major economies, including the United States, China, and the European Union, are currently exploring or actively developing their own versions. The Digital Yuan app, Federal Reserve reports on CBDCs. The push for CBDCs is gaining momentum due to their potential advantages. Let's take a closer look. Advantages of CBDCs. 1. Stability. Unlike cryptocurrencies, which can be highly volatile, CBDCs are backed by governments, providing a level of stability that consumers can rely on. 2. Efficiency. Transactions using CBDCs can be processed faster and at a lower cost than traditional banking methods. This could revolutionize how individuals and businesses conduct financial transactions. 3. Inclusion. CBDCs aim to bring financial services to the unbanked populations, allowing more individuals access to digital finance and economic opportunities. Countries like China are already testing their digital yuan, while the U.S. Federal Reserve has published several reports analyzing the implications and logistics of implementing a CBDC. But as we embrace these advancements, some critics express significant concerns. Is the advent of CBDCs a step towards a cashless society? Criticism of CBDCs. Critics argue that transitioning to a fully digital economy could lead to increased government control over personal finances and heightened levels of financial surveillance. With every transaction recorded, questions arise about data privacy and consumer autonomy. The debate surrounding CBDCs is crucial as the world weighs the balance between efficiency and personal freedom. While they promise to revolutionize financial transactions, the implications of implementing these digital currencies must be carefully considered. The role of cryptocurrencies and decentralization. As we witness significant shifts in the way money is perceived and utilized, decentralized cryptocurrencies like Bitcoin and Ethereum are emerging as formidable alternatives to traditional financial systems. Unlike central bank digital currencies, CBDCs, which are issued and regulated by governments, cryptocurrencies operate on blockchain technology, providing users with an unprecedented level of autonomy over their finances. As we delve deeper, you can see the notable price fluctuations of Bitcoin over the past year, illustrating both its potential for gains and inherent risks. Additionally, we've seen an increase in crypto ATMs popping up worldwide, making it easier than ever for individuals to buy and sell digital currencies. People want financial freedom. Crypto allows for peer-to-peer transactions without middlemen, making it a powerful alternative to traditional banking, says blockchain expert Lisa Tran. Her insights highlight the growing desire among individuals to take control of their finances outside the constraints of conventional banking systems. With its rising popularity, Bitcoin's legal status continues to evolve. In a historic move, El Salvador adopted Bitcoin as legal tender, making it the first country to embrace the cryptocurrency as a standard form of payment. This landmark decision has sparked debates on the viability of cryptocurrencies in mainstream finance. Major corporations, including Tesla and PayPal, have also stepped up, integrating cryptocurrency payments into their platforms, further legitimizing the digital currency market. However, the journey toward widespread adoption of cryptocurrencies is fraught with challenges. Key issues include 1. Regulation battles. Governments and financial authorities around the world are grappling with how to regulate cryptocurrencies, balancing innovation and consumer protection. The lack of a clear regulatory framework has resulted in uncertainty, which can stifle investment and hinder growth. 2. High volatility. Bitcoin and other cryptocurrencies are notorious for their price volatility. While this volatility can lead to substantial gains, it also poses significant risks for investors, making many hesitant to enter the market. 3. Environmental concerns. The mining processes for cryptocurrencies, particularly Bitcoin, consume vast amounts of energy, leading to concerns about their environmental impact. Critics argue that the ecological footprint of mining operations undermines the sustainability of cryptocurrencies as a financial alternative. As we continue to evaluate the role of cryptocurrencies, it's clear that they represent a paradigm shift in our financial landscape. The promise of decentralization and the potential for financial autonomy resonate with millions around the globe, but navigating the complexities associated with them remains a pressing challenge. As the world watches this financial evolution unfold, it raises critical questions about the future of money, trust in financial institutions, and the balance between innovation and regulation. We'll continue to bring you the latest updates on cryptocurrencies and their impact on the global market. Stay tuned for more insights right after this short break. What's next? Are we ready for a cashless world? As we dive deeper into the future of our economy, today's discussion turns to a pressing question. Are we ready for a cashless world? The transition to a more digital economy is already evident, and experts are pondering the implications of this shift. While physical currency isn't expected to disappear overnight, it's becoming increasingly clear that it may soon lose its relevance. Cash versus digital payments. In recent years, we've seen a significant surge in digital transactions. The COVID-19 pandemic accelerated this trend as consumers and businesses turned to contactless payments and e-commerce in unprecedented numbers. According to recent studies, the use of cash plummeted, with a notable rise in the adoption of mobile wallets, online banking, and even QR code payments. But what does this mean for our future? Experts are weighing in on key questions that could shape the financial landscape in the years to come. Questions of the future. 1. Will central bank digital currencies, CBDCs, replace cash entirely? Countries around the world are exploring or even piloting CBDCs as an alternative to cash. These government-backed digital currencies aim to provide a secure and efficient way to perform transactions. But could CBDCs ultimately replace cash altogether? Or will people continue to prefer the tangible nature of physical money? 2. Will decentralized cryptocurrencies survive government regulations? With the rapid growth of cryptocurrencies, there's ongoing debate about their future in the context of government oversight. Will decentralized coins like Bitcoin and Ethereum be able to exist alongside regulatory frameworks? Or will strict regulations stifle their growth and innovation? 3. Are we heading toward a completely digital financial ecosystem? As fintech companies disrupt traditional banking and payment systems, are we on the brink of a fully digital financial ecosystem? This transition could lead to groundbreaking efficiency in transactions, but may also create challenges like data security and privacy concerns. As we contemplate these questions, the overarching theme remains: the digital economy is here to stay, and cash may soon become a relic of the past. The convenience and speed of online transactions are reshaping consumer habits, but it's essential to recognize the diverse needs of populations around the globe. Many people still rely on physical currency for everyday transactions. We want to hear from you. Is cash still king in your life, or do you think digital currencies are taking over for good? Share your thoughts in the comments below. And don't forget to like, subscribe, and hit that bell icon for more updates on the global economy and the ongoing evolution of our financial systems. Thank you for watching Global Finance Today. We'll see you next time as we continue to explore the dynamics that shape our economic future.